Welcome back, Alpha Hunters. The markets are closed for the second trading week of January in 2024, January the 12th. All right, so let's take a look at what went on this week. We kind of know what happened last week, right? There was a lot of profit taking, selling in the new year, kind of taking advantage of the calendar turning tax. You don't have to pay gains on, the super strong year-end rally that we had at the end of last year until next year. So there was a lot of profit taking last year. So there was a lot of profit taking last week. This week, Monday, we just kind of had a little minor gap up, but man, Monday was a very strong bullish day. The entire day it was a very strong day. Tuesday, gap down, a little bit overextended there at the end of the day on Monday. So we had a gap down, and then just kind of got back to neutral on the day, and then kind of came back down, ending off the session highs. Wednesday, a little bit of a higher open. Traded sideways there for the beginning part of the day. Traded higher there, middle part of the day. A little bit of a sell down there at the end of the day. Gap up there on Thursday. Traded down pretty strong. I'm not going to say pretty strong, but it was kind of strong. We saw a lot of pullback there, and I'm going to show the kind of the significance of that. And then we had a nice little rip there. Second half of the day, last hour kind of flat. Not really doing a whole lot. Friday, nice gap up, traded down, tried to bounce, and then it kind of failed in the last 2 hours. Last 30 minutes or so, kind of ended off the afternoon low there. Now, what kind of went on here on Thursday, Fridays? We actually got to some data, right? Not much was going on Monday, Tuesday, and Wednesday. People just buying the dip off of last week. But Thursday, we got CPI. And CPI wound up coming in a little bit higher than expected. Inflation coming in at 3.4% for the year over year. And that was expected to come in at 3.2%. Core inflation came in at 3.9, is expected to come in at 3.8. So a little bit higher. Market didn't really kind of like that too much. Even pre-market, we saw a little bit of a dip, but it kind of bounced before the market opened, and then we just kind of sold off there. Friday, though. So what was kind of interesting here on Friday was PPI, right? That was the data that we got as far as economics. We also had financial earnings start Friday morning, but PPI was actually a negative 0.1%. The market was expecting a 0.1%. Yeah, I mean, okay, it was down a little bit. Nothing to get all shook about. The interesting thing, though, was really more on the technical side of the market, and we'll get into a little bit later on. All right, taking a look here at sector performance throughout the week. Energy's the big underperformer. Energies have been just either the best sector on the day or the worst sector on the day pretty much every day so far this year. It has been kind of crazy watching energies there. Utilities also underperformed pretty good there. Materials, financials underperformed there. Earnings season started for them on Friday. Industrials, real estate, discretionaries, healthcare, and staples all underperformed by a pretty good amount compared to the S&P 500. XLC, communications, and tech, XLK, the two best performing sectors on the week. And you notice this is big tech. Now, the reason why you don't really see the XLY up here is because, well, Tesla has kind of just broken down. It was breaking down throughout the week. If you're seeing some of those midweek kind of recap videos that go out during the week, you'd see Tesla was just kind of fading. The market was bullish Monday, Tuesday, Wednesday. Tesla was only bullish on Monday and just kind of faded down and then broke down pretty good on Thursday and continued breakdown on Friday. So that is why you see the XLY kind of falling off there on Friday. But tech getting that bounce back from last week's big sell-off, profit taking kind of going on. The VIX for the week had a nice little drop. Obviously, Monday had a higher open. Pretty much happens every week, and then we just kind of dropped off the rest of the week. So nothing you wouldn't expect as the market kind of went higher for the week. The VIX dropped. So yeah, kind of makes sense. DXY kind of sideways here for the week. I was kind of expecting a little bit more of a break here Thursday, Friday. Don't really know which way this would go now. I was kind of thinking maybe if the dollar dropped off there Friday, maybe it's starting to break down with that upper wick that we get Thursday. And I don't really know right now. Right now we got a pretty good channel. I would still probably be more willing to play really this January big old doji that we got, January 5th, I believe. Yeah, January 5th doji. So that's the way I would look to play that right now. Whichever way that breaks, I would take that. Maybe if you're kind of aggressive, take this high for January 11th. But the one thing I would want to see over that January 5th is it'd be breaking that 50 EMA. It'd be breaking that high from January 5th. So that's why I would much rather play that January 5th. There's not much of an upside if you did take it over that January 11th high to that 50. So I would want to wait. Even let's see even where the long terms are. Yeah, long terms you're going to get to 200. It's kind of sideways, not really going to be a big deal. You're probably going to be looking for a move up to the 100, which this kind of top area that we had back in mid-December would probably be, an eventual target. All right, take a look here at the GLD, the Gold Trust. Nice little gap down on Monday, which was kind of interesting that it gapped down as much as it did. Dollar was kind of flat for most of the week, as we just saw. It was kind of flat-ish, just that gap down that we had on Monday. And then we had this strong bounce. And I've kind of mentioned it before. I would much rather be bullish on any kind of buying opportunities. I don't really want to be bearish here because I didn't really see a reason for gold to pop that strong. So that just kind of tells you gold's eventually just going to pop up out of here and it's just going to be on the run for the year. 10-year yields, nice breakdown here Thursday and Friday on the 10-year yield. So yeah, not looking too bad. I think the bigger story would be on the 10 and 2 inversion. Nice breakout higher here. Statistics and history usually show us that whenever we get the yield curves to uninvert and get back to normal positive, then that's when we typically see market bearishness. HYG, high yield corporate bonds, nice upper wick that came in on Friday, kind of traded higher all week, which was kind of interesting because bonds didn't really do too much the beginning part of the week. Started kind of breaking down there towards the end of the week, but HYG, kind of a nice run, kind of getting back to the highs that we put in late December. So we'll see if maybe this is like a double top, or maybe it's just this, a retest higher, and then now we're gonna turn and go lower. Still haven't gotten really through this zone. Obviously, you take out this high from back in December 27th, probably just going to continue higher. All right, taking a look here at the LQD investment grade corporate bonds. Nice move higher all week. Yields didn't really drop off as much as you think, but bonds kind of went higher. So there you go. Take a look at the TLT, and this is a little bit more of what you would expect, a little bit more sideways. So the Treasury bond ETF didn't really do as much, which Treasury yields, which I just looked at with the 10-year yield, they didn't really move all that much, which is kind of what you expect from the TLT. So it seemed like more of the non-Treasury bond areas were doing a lot better than Treasury bonds this week. All right, we're going to keep it super short this week because really there's about only one thing I want to talk about. And we'll get to it when we get to the Qs and SPY. But the RSP, kind of looking a little motorcycle handlebar-ish here. Kind of got the right handlebar kind of forming out. If this is going to be the right handlebar, we should see the market breakdown here very soon. So maybe we see that next week. Not exactly the best day on Friday there for the RSP. Maybe financials had a lot to weigh on it. Energies maybe a lot to weigh on it. Discretionaries also weighed on the market on Friday. So yeah, maybe we'll see the market breakdown here early this next week. The DIA, the Dow Jones Industrial Average, pushed a little bit higher this week. Did not hold either day on Thursday and Friday. And UNH had a pretty rough day on Friday, which is the largest weighting on the Dow Jones. So maybe we'll see the Dow Jones kind of break here because it hasn't broken this 10 EMA and it has been hanging by a thread on this EMA like every day for about the past week and a half. Actually, every day pretty much this year so far. So maybe we'll see this thing break that EMA and actually close below it. Take a look here at the IWM, the Russell 2000 ETF. Nice kind of move on the open today. We got above the high from Monday, which was kind of an interesting day there on the IWM because we had such strong bullishness on Monday. We kind of retested into that 10 EMA and then we just immediately gapped down and we had a really hard time getting bullish. I mean, the best bullishness that we did see the rest of this week was the gap up that we got on Friday. So quick flash higher, took out the the Monday high, the week high, and then we just kind of sold off there on the IWM pretty much the rest of the day. So we had the weekly low and the weekly high there on Thursday, Friday. And this one's having a really hard time. If you were thinking that, okay, this lower wick, you're gonna get a false breakdown. There's the buy, you get the gap up. Maybe you're gonna run and continue higher, and then it just fades the whole day there on Friday. That does not look good. That really doesn't. I was kind of thinking, maybe early in the day with how that gap would have looked there on Friday, that maybe you see this kind of at least just hang out and it'll just stay elevated, but it just didn't. It faded down. That just doesn't look good. That looks like it's going to break down. All right, taking a look at the Qs. I'm going to kind of look at the Qs and the SPY kind of simultaneously and together here. Now, what's significant here is the Qs have not made a new high over December. And if you take a look at the SPY, same time period, well, the SPY did make a new high. So I did kind of cover this throughout the week in the midweek kind of videos. This is a very important deal, very important, because we've seen this numerous times, like major kind of turning points in the market where the SPY tops right after the Qs top. So looking back here at July, the SPY topped out July 27th. Qs actually topped on July 19th, basically a week earlier. Also, this bottom here, Qs bottomed October 26th, and the SPY bottomed October 27th. So basically, and you can go back any kind of major pivot or turn point in the market, you can kind of see that, the SPY bottoms or tops after the Qs do it. The Qs are the first one to do it. And that's usually shows the switch and change in leadership. But really what it mostly shows is the change of direction, because the Qs lead the market, right? We know that, and they're the biggest weighting. So whichever way they are going to go, the big tech guys, they're going to take the market. So we'll see what happens, but this isn't something that will play out immediately, right? We saw late July, even when the SPY hit that new high and the Qs didn't, it took a couple days before we saw a real breakdown. And so maybe we'll see a couple of days here, maybe another day or two before we see maybe some significant selling maybe come in this next week. And we still might get it from financials. Maybe some of these financial companies really kind of say, yeah, we have some issues. They haven't really heard that yet, but we've only heard from like 4 major financial companies so far on Friday. So, just getting to the tip of the iceberg on earnings season, and not a bad spot to maybe try to play it bearish. Be kind of aggressive. You can have a stop loss a lot higher up, but if the Qs then take out the high that it had from late December, then yeah, okay, so the Qs are continuing to push higher, then you just kind of take it off. You take whatever the loss you kind of have at that point in time. So that's just the way I would look to play it. And yeah, other than that, have a great weekend, half hunters. Take care. If you're going to have crazy weather, just be safe. I will try to be on the live stream next week. Kind of mentioned that on the live stream today or on Friday. If I'm not able to make it, it's basically I'm dealing with weather or unreliable power or internet service. So I might not be on live stream for any point in time this next week. So have a great weekend, Outfitters. Be safe and take care.